The main market of the Jamaica Stock Exchange had its first listing of the year without an IPO. I'm Kalilah, Reynolds, financial journalist and educator based in Jamaica. Now, some of you may have noticed a new ticker on the JSE's main market and are wondering, when did that get there? Well, Trinidad-based distribution company S Bryden and Sons debuted on the Jamaican market on November 10. It's the first main market listing of 2023, even though we're close to the end of the year. And if you're starting to feel a little bit of FOMO, wondering how you missed this massive IPO, you didn't. But let me start from the top. S Bryden and Sons is a giant in the distribution game. Founded in 1923, the company is one of the leading distributors of food, pharmaceuticals, hardware, and industrial equipment in Trinidad and Tobago, Barbados, and Guyana. Last year, Jamaican manufacturing and distribution company Seprod acquired a 60% stake in the company. And the acquisition has been making bank for Seprod. Cha-ching! According to the company's Q2 results for the 6 months ended June, the company's seen a 45% increase in exports, which makes sense since they now have this massive distribution network. Also, revenues doubled for the period, with the company earning over $54 billion in the first 6 months of the year, compared to $26 billion the year before. Seprod credited the S Bryden's acquisition for the positive growth. Now, Seprod's management has always made it known that they wanted to take S Bryden's public, listing on the JSE and then eventually on the Trinidad and Tobago Stock Exchange. The Seprod Group itself is listed on the main market of the JSE, so Bryden's performance would be accounted for there, but the company can still be listed as a separate entity since it is a subsidiary. And like I said earlier, Bryden started trading on November 10. But wait! That kind of feels like we skipped some steps. How did Bryden's go from a private company to trading without an IPO? Well, that's because they were listed by introduction. Typically, when a company wants to go public, they do an initial public offering, IPO, and create new shares to be sold to the public. With a listing by introduction, no new shares are created. Only existing outstanding shares are offered for trading. This is known as a direct listing. Companies choose this route for several reasons. Sometimes they don't have the money or the time to go through an IPO, which can take years. But one of the main reasons for skipping an IPO is to avoid diluting existing shareholdings. Like I said, an IPO creates new shares, and those shares have to come from somewhere. That typically means that existing shareholders have to give up a part of their stake in the company so that those shares can go to the public. Seprod has a 60% stake in Bryden's, and the remaining 40% is shared among the previous owners, the Bryden, Fitzwilliam, and Maingott families. Now they're selling their shares directly to the JSE. The original listing price is determined by the overall value of the company. S Bryden started trading at $22.50 Jamaican, but a direct listing has its risks because there's no way to tell if people would be interested in the company and if the shares will trade. But so far, the market has responded well. At the end of November, the stock was up 31%, closing at $29.55. And that's the bottom line. So what do you think about the JSE's newest company? Is S Bryden's a company you're interested in? Let me know in the comments. Take our Investing for Beginners course to learn how to start investing. The link is in the description. Let's get this money.
Let's get this money.